Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top 3 REITs that I love and I'm never going to sell, and some of the REITs that you guys should own. So now before we actually jump into the episode, I want you guys to go ahead and check out my blog, Money with Carter. We talk about investing, money management, and trading stocks. You guys will love it. All of that will be down below, so let's jump into the episode. So now before we actually talk about what, our top 3 REITs are, what is a REIT? What a REIT is, it's a real estate investment trust. So what this means is companies go out and they buy commercial properties, they might buy apartment buildings, they might buy houses. And as the tenants or the companies pay on their lease or their rent, you guys get dividends from it. You guys get the cash flow. Now, some of these REITs pay monthly, quarterly, and some of them pay bi-yearly. Very rarely will they actually pay yearly, just because by law they have to pay 90% of their taxable income as dividends. So as you guys know, I'm a huge dividend guy and a trading guy. So as you guys, I'm sure you guys know that I love REITs. So now, the moment we've all been waiting for, what are the top 3 REITs that I currently own and that you guys should own? Let's go. Alrighty guys, so we are up and loaded here on the TD Ameritrade's Thinkorswim platform. So the very first REIT that I do see value in is ticker symbol VNQ. This is Vanguard's real estate ETF, or Vanguard's REIT. Now, one of the main reasons why I actually like this stock is because since 2008, we've had this beautiful uptrend until really the 2020 crash, where the stock has gone from $99 hitting lows at roughly $59, if not $55. So this stock has a beautiful uptrend. Not to mention, they do pay that fantastic dividend. Let's go ahead and go on dividend.com. They do pay this dividend, and it is roughly $2.59 per year, which is a 3.54% yield, which is honestly amazing. So this stock is a fantastic REIT to have, just because I love the trend. When we look at dividend and dividend paying stocks, we want to make sure that they're reliable. It's backed by Vanguard. Vanguard has trillions of dollars under watch, and not to mention, they do have this beautiful uptrend pattern, and they do pay that awesome dividend. So I do think this is the number one dividend paying REIT that you guys should have. It's very less risky compared to some of the ones that we're going to be talking about. This is just one that we should just have in and just continue to own for long term, and you don't really have to worry about it going down. It's like buying some companies in the S&P 500. You don't have to worry about it. It's very low risk, but the reward is very nice, as you guys can see. So now, moving on to the next stock. The next stock here is ticker symbol O. So this is the Realty Income Corp. So the reason why I like this one as well is just because we have this beautiful uptrend pattern as well. And the thing about this one, let's go ahead and go on dividends.com. So this one pays a 5.5% yield, and that is roughly $2.80. And so the dividend growth for this stock is 24 years, which is insane. So over the past 24 years, we've had this stock continue to consecutively pay dividends. So now, as this stock's kind of going and bouncing on this 200 moving average line, that's this yellow line right here. When the stock's above it, it acts as support, meaning the stock has a tendency to bounce from it. And when the stock's below it, that's resistance. So I do think getting into the stock under this yellow line is just a fantastic buy, just because we can get into it. The stock's going to push back up once this whole virus is done and the whole market kind of comes back. Then you're going to be up in profit. You're going to get this fantastic dividend payout. And they do own a lot of places like 7-Elevens. They own some Walgreens. They own a lot of the actual properties that a lot of commercial places go on. So you know that these companies are going to consecutively pay out to the Realty Income Corp, and you're going to continue to get that dividend. That's one of the main reasons why I actually like this one. This one is a little more risky, just because it is a company and it's not like VNQ, which is a combination of a whole bunch of REITs. This is just the one ticker symbol O, Realty Income Corp. So moving on to the next and final one here, because we're doing top 3. Now, this next one here is ticker symbol NLY. Now, this stock hit highs at roughly $21 in 2001, and then it's just kind of been trading between 21 and really $8 or $9. Okay, so now this stock, one of the main reasons why I like it is because the dividend yield. So let's go ahead and go to dividends.com. I think dividends.com is amazing. So looking at this one right here, the dividend yield is 17.18%. So 17% yield, which is, you don't even hear about it really, because it's insane. So the annual payout for this stock is about $1, which is pretty good. Now, the only thing that I don't like about this is we do kind of have this consolidation zone. It doesn't really have an upward trend. It is more of a stock that you own and you continue to kind of get these amazing dividends from it, and you can either invest it back into NLY, or you can go ahead and invest into other companies. But I do think getting this stock under really $7 is still a good buy, because this stock has a tendency to trade from 12 to about 8 or 9. So you're going to get into it. Let's say you guys got into it at 6. You're going to get into it. You're going to get these dividend payouts. And once the market recovers, I could see this stock coming back up to the $12 mark, and you guys are on a 50% return just from that. So there's more of a trade rather than just a consecutive payout for this dividend. I do think this one carries a little more risk just because of the very, very high yield that this has. Really, the higher the yield, the more riskier the stock is. You know, I do think that all of these are great REITs to have, but I think you have to understand the risk that comes with it. You know, the VNQ carries consecutively less risk compared to O. O is very less risky than NLY. NLY is more of a riskier type REIT that you can get, but all of these guys are fantastic. Alrighty guys, so that is it. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash that subscribe button. We are nearing 3,000 subs, so that is literally incredible. So now don't forget, the very first REIT is ticker symbol VNQ, then we got ticker symbol O, and then NLY. So that is it. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash that like button. We'll see you guys tomorrow, another episode. Don't forget, we are doing the podcast. The podcast will be up tomorrow, so go ahead and check that out. We'll see you tomorrow. Take care.